Into a fresh edition of Opening Bell with me, Lovisha Darad. Well, it's a brand new day and hopefully fingers crossed if we could see a rebound after yesterday's sell-off. The GIFT Nifty did point out to a rebound in today's trading session, but the pre-open rates have been quite fairly mixed at this point of time. But the global handover is not too exciting as well. We saw quite a shake-up in the Wall Street after the emergence of China's DeepSeek. So cues from the Asian markets are also quite thin because of regional holidays due to the new year as well. But yes, the talk of the town, that is your China's new AI model, that is your DeepSeek, that is giving a smart challenge to OpenAI's ChatGPT as well as Google's Gemini as well. Now, what has set DeepSeek apart is its open source model where developers can build on it and its cost efficiency as well. About like less than $6 billion they have taken to build on it, and that too they've used in the cheaper Nvidia's AI chips. So this is in contrast to what bigwigs have been using, like Meta and what Microsoft has been using, and they've poured billions of dollars into what Nvidia's high-end chips require. So the cost efficiency is quite raising an eyebrows all across the overseas as well. But yes, we will be navigating what the impact of this tech route would be on the Indian markets. We'll be discussing about what your trading strategies should be during this earnings season as well. And of course, don't forget to drop in your stock related queries. We will be taking them up shortly as well. Now, let's quickly move on and take a look at the top headlines this hour. Stocks closed mixed on Wall Street. Nasdaq plunges 3% to record the worst day in over a month as DeepSeek fears spark a tech crowd while Dow Jones ends higher. Most Asian markets are closed for the Lunar New Year holiday today. Oil prices slip pressured by US President Donald Trump tariff talks. Weak PMI data from China also weighed on prices. Gold prices retreat ahead of Fed's meeting, which starts later today. Tata Steel reports a profit in Q3 versus expectation of loss. Euro business loss narrows while debt reduction continues. Coal India earnings beat expectations on better realizations and improved operating leverage. In key earnings today, Bajaj Auto is expected to report a subdued quarter, while Cipla profit is seen rising by 16% year-on-year. Also watch out for numbers from TVS Motors and Colgate. RBI announces measures to boost liquidity just days after top bankers raise alarm on liquidity reaching the lowest level in over a decade. RBI announces 60,000 crore rupees through bond auction in 3 tranches. All right, if we take a recap of what happened in the last session, well, it was a deep sell-off and Nifty did hit its 7-month lows and ended below the 22,900 mark. So the next support that we could be eyeing out for is 22,500 for the benchmark index. A broad-based sell-off yesterday did wipe off investors' wealth by 8 lakh crore rupees, and all sectors also bled. We could see that PSU, pharma and IT indices, they were some of the top laggards. Meanwhile, the pain point definitely emerged from the broader end of the markets because they were severely hammered. We saw that the Nifty small cap particularly closed with about 4% cuts, and both the mid cap and small cap indices also hit 7-month lows as well. Some remarkable indices, if you look at some of the sectoral indices, quite a bit of lows that they have hit. Nifty Pharma, for instance, that hit for 5-month low. Auto index was also at a 9-month low, and even Nifty Realty index was at 10-month low. So apart from that, India Wix, that is, above that 18 odd levels. Now, since it's the budget week and the expiry week as well, so it wouldn't come as a big surprise that, the volatility index has become elevated. So, yes, that is coming on that front. But yes, Q3 earnings, when we talk about that, today we will be seeing some earnings reactions. We can see from Tata Steel, IGL, Coal India, all of them will be reacting to their Q3 results. We will be discussing more of that later in the segment with our market expert as well. And which earnings should we watch out today? As I mentioned about Bajaj Auto, Cipla, all of them will be on our radar. Others like TVS Motor, Hyundai Motor and the likes will also be reporting their Q3 results. So keep them on your watch list as well. Let's quickly take a look at how today's trade setup looks like. First up on your screen is the option queues data. We can see that the Nifty put call ratio has fallen to 0.75 levels from 0.84 levels from the previous session. So we can see that the nervousness still prevails in the markets. The next on your screen is the F&O ban list. Well, no new additions, but the stocks that have been retained include the likes of India Mart, Intermesh, Manappuram Finance, Mahanagar Gas, PNB And stocks that have been out of the F&O ban list, they include the likes of Aditya Birla Fashion and Retail, Bandhan Bank, Canfin Homes, Dixon Tech, L&T Finance. And finally, the fund flows data on your screen now. Well, relentless selling by the FIIs. They have sold about 5,000 crore rupees worth of Indian equities in the last session. And DIIs, like the tug of war persists, they have lent in a helping hand. They have bought around 6,600 crore rupees worth of Indian equities. Now, just a couple of minutes before we go to the opening bell. But on that note, let's quickly get on board with our technical expert of the show, Devang Shah of Angel One. Devang, good morning. So good to have you.
Very good morning.
Devang, Nifty has hit a 7-month low below that 23,000 level. So can we expect a further downside to 22,500 as well?
So what we seen in Nifty is trading on low top, low bottom structure. Also, short-term trend is negative. India is also indicating some volatility expected in the market. So we suggest to traders to cautious approach and not build heavy position in the market because major event are there. So we suggest traders to go for the stock specific approach in the market. Nifty major support, immediate support is 22,700. After that, 22,500 is a major support for the Nifty, and resistance is 23,000 and 23,200 is a resistance for the Nifty.
Okay, all right. Devang, how does the bank Nifty look like? Because it has been trading in a consolidation zone. Can we expect certain breakout? Because yesterday's Wall Street sell-off, that was majorly from tech. So I think all hopes are today on Bank Nifty index to perform well, for Nifty to hold up well as well.
So what we looking at the Bank Nifty chart also it's a major trading is a major support. Bank Nifty is a support near a support is around level of 47,800, 47,700 is a major support. If it's break, then maybe we've seen some further fall in Bank Nifty. So 47,700 is a important support for the Bank Nifty, and the resistance around 48,300, 48,500 is a resistance for the Bank Nifty. But short-term trend is negative right now for the Bank Nifty.
Okay, short-term trend is negative for Bank Nifty. Devang, ahead of budget, do you find railways, defense, all of these consumption theme as an attractive bet for traders, or how do you expect them to trade these capex related themes at this point of time?
So, as we suggest, do some stock specific approach in the market. We are going for defensive sectors like pharma or FMCG sectors because we expect some volatility in the market in coming session. So, for capex thing in the railway stocks, one can go for the stock specific approach. So here is Rail Vikas Nigam. Overall chart structure is short-term chart structure is positive, is nearby support. So one can buy in this particular juncture. Keep a strict stop loss of 390, about 425, 420, 30. We expect some this level.
Okay, all right. How does the broader indices look like for you, Devang? Because yesterday we saw quite a bit of a sell-off. Both of these indices, Nifty small cap and as well as Nifty mid cap, they also hit 7-month lows. Can we expect them to see a further bit of sell-off in the near term as well?
You see, Nifty midcap, what Nifty midcap overall trend is negative. Stock is so midcap index is trading is low term structure. Also is trading it's long term moving average. So maybe for this further sell off expected in Nifty midcap.
Okay, all right. How about Nifty Auto Index, Devang? Because we will be seeing some auto sales figures rolling out from from 1st of February as well, and it did hit 9-month lows as well in the last session. How do you expect the Nifty Auto Index to fare in the next couple of days?
So Nifty Auto Index is trading is definitely in short. It's a negative trend, but it's a major support. 21,700 is a Nifty Auto Index major support. So if it's hold, then maybe we expect some pullback here on. 22,300 is a resistance level for the Nifty Auto Index.
Okay, all right. Let's take some stocks in focus. Well, less than 10 seconds, 20 seconds to go for before we hit the opening bell. But let's take some. Okay, let's understand. Quickly, what should be the trading strategy of for the near-term investors? We have a heavy week lined up. Devang, what should be in just like one or two lines?
So stock specific approach, what we suggest, like defensive sectors like pharma, IT, FMCG stocks, one can trade this particular sector.
All right, some defensive stocks we should be taking ahead of this, budget-heavy week as well. But first rates coming on your screen, we can see that the Nifty has opened up in the green. 0.6% gain coming up, 22,950 levels above Nifty 50 has opened up. Bank Nifty is also doing well. We can see some bit of a rebound taking place in the market. Bank Nifty opened up, with 0.8% gain. Sensex is also up about, 400 points. And even Nifty mid cap, after yesterday's deep sell-off in the broader end of the markets and the broader pockets of the markets, we can see Nifty mid cap has opened with about, fair bit of gains, 0.4% coming in. Most of the advance and decline ratio, we can see that the advances are taking an upper hand at this point of time. But let's see what else is doing well. We can see that the India VIX after yesterday's 8% jump has eased up, and it is down about 0.7%, but still above 18 odd levels. Among the other sectoral indices, all of them are trading in the positive territory except the pharma index that is taking a little bit of a knocking. Defensive is taking a bit of a knocking down about 0.6% loss is coming in for the Nifty pharma index. Well, let's take what is taking a good picture on the other hand is the Nifty Bank Index. Well, as we were expecting the Nifty Bank Index to hold well and bring in certain recovery in the markets, and they are doing the job well as well. Bank Nifty Index up about nearly 1% at this point of time. Nifty IT Index on the other hand, 0.5% gain coming in. Nifty Metal Index, 0.4%, Nifty Media Index 0.5% gain. Nifty PSU banks, well, one of the strong up moves. Nifty PSU bank index up about 2%. Nifty Realty Index after yesterday's lows that we saw for Nifty Realty Index up about 1%, 1.5% gains coming in for the Nifty Realty Index. On the other hand, if you look at some of the top Nifty 50 gainers, we can see Shriram Finance doing well, 3% gains coming in for Shriram Finance, Axis Bank, HDFC Bank seeing a gain of about 1% each as well. So banks have taken an upper hand, and they are bringing in a much needed relief rally for the Nifty 50 index. Adani Enterprises gains of about 1%, Infosys, Trent, Bajaj Finance, all of them doing well and featuring in the top Nifty 50 gainers list as well. If you look at on the conversely, the contrasting picture on the Nifty 50, what is not doing well, that include the likes of Sun Pharma with about 1% cut that is coming in. Dr. Reddy's Lab also not doing well. Pharma indices featuring among the top Nifty 50 losers. We will be having Cipla's earnings, which is coming out today, that could set the tone for how the pharma pack is panning out for the third quarter. M&M seeing a cut of about 0.8%. Cipla down about 0.7%. As I mentioned, that Cipla will be reporting its Q3 earnings, where moneycontrol estimates that there could be 16% year-on-year rise in net profit. Wipro down about 0.5% downtick coming in for Wipro, and Ultratech also seeing a 0.5% downtick as well. But let's take some stocks in focus. That is your Coal India. The state-owned company did report a 17.5% drop in net profit, but it did exceed street estimates. On the other hand, we can see that the revenue also saw a marginal drop of 1% year-on-year. If you look at the operating profit, that also saw a drop of about 5% year-on-year in Q3, and the stock is reacting to those tepid Q3 results as well, down about 1% at this point of time. Devang, Coal India as a stock, it has been a downward spiral. Do you expect the trend to continue as well?
Yeah, what we've seen in Coal India chart, overall structure is negative. Stock is trading lower top, lower bottom.
I think
Structure
there is
also is
a bit of an audio issue. You're on mute, I think.
Now you can hear me?
I think there's a bit of an audio snag.
Uh,
Okay, now I think it's audible. Devang, Coal
okay.
India as a stock, as I was talking about. Tepid Q3 results,
So,
how do you expect the stock to go ahead?
so Coal India overall chart structure is a weak structure. We see the Coal India overall chart structure is lower top, lower bottom structure. We see so maybe further fall we expect in the Coal India. Around the major support is 360, resistance is 390. So we expect some fall in Coal India for the session.
Okay, for the session you expect a fall. Well, let's take another stock in focus, that is your Tata Steel. The company did report a profit, drop of about 36% year on year in Q3, while revenue was down about 3% year on year due to weakness in the Indian operations. Devang, the stock recently hit a 52-week low, but however, today the stock is doing well because it has exceeded what the street was expecting. Should we expect the stock to trend range bound, or how do you expect the next target to look like for Tata Steel?
So Tata Steel overall structure is a consolidation seen in the last few days. 133 is a major resistance for the Tata Steel. If it's break, then we can expect some bounce back from Tata Steel around 140, 145 levels. Expecting if it's break 133 levels. Major support is 125 is a support for the Tata Steel.
Okay, 125 support coming in for Tata Steel. Let's take some of the viewer queries because they've been waiting in anticipation, so we'll be flipping around. Well, Naveen is asking the first view on Bank of India. Bank of India, how does the stock look like on the charts, Devang? Because yesterday it saw a strong rally of about 5% and today also it is up about 3%.
So in Bank of India, we're seeing some major its break its resistance level also with the volume. Possible we see some more upside around 115, 115 levels odd levels. So one can hold the stocks with a stop loss of 105 around 115 is the target.
Okay, 115 target coming in for Bank of India. Let's move on to another viewer query. Well, Kishore is asking the view on Endurance Tech to invest and the range to add if the stock looks good on the charts. Endurance Tech, if you look at 6-month charts, Devang, the stock has been on a slipping trend. 21% downtick coming in for Endurance Tech. Do you expect the stock to see certain kind of a relief or a bullish momentum to emerge in the near term?
So Endurance Stack, the overall structure is negative, low top, low top structure we seen in chart. Also, volume is quite low. So we suggest we put a strict stop loss around 1950. If it's break, then maybe further fall. We seen further fall in the Endurance Stack.
All right, this setup looks negative for Endurance Tech. But let's take some stock in focus once again. That is your Indraprastha Gas. The stock is down in today's trading session after the company did report a 31% decline in Q3 net profit after a cut in domestic gas allocation. While revenue also saw a moderate rise on a Y-on-Y basis. Devang, as a stock, if you look like at Indraprastha, it did take a good reverse course after allocation increased by 31% from GAIL, but the stock has been fairly range bound between 390 to 400 odd levels as well. Any targets that you're eyeing out for on your radar?
So IGL is trading the range bound kind of thing. So I think one can wait and watch because major support is around 360 zone and resistance is 380. If it's break either upside or downside, then we can enter that particular site. But right now, I think we can wait and watch for the IGL.
Okay, all right. Let's take another stock query. Well, Alex is asking the view on Railtail for the short term. Railway stocks ahead of the budget, how does the stock look like? Because today the stock has not been doing well, but if you look at from the 6 months perspective, again the stock has been down, 30% odd. So what can we expect? Do we expect, any kind of budget announcement to spark some rally on these railway names?
So, what we see in a Railtail overall structure is negative. Stock is trading low top, low bottom structure. In budget, it's definitely quite volatile session, volatile we've seen in this particular sector. So, I think one can avoid right now railway stocks. After the budget announcement, we can see this kind of stocks, but major support for the Railtail is around 350 is a support and 362 is a resistance zone for the Railtail.
Okay, 350, 360 we can eye out for. Let's take another viewer query, that is your Raj is asking the view on Alalia Contracts. Alalia Contracts, well recently the company did win high orders which was worth about 1300 crore rupees. And how does the stock look like in the near term? Because 6 months it has been a downward spiral as well. It did see some uptake in December 20 odd levels, but after that also the setup of the stock is quite negative.
Can you repeat the stock name?
Alalia Contracts.
So, Alalia contract is a trading is low top bottom structure. We've seen some maybe further correction expected in the stocks around 750 odd levels is a support zone and 780 is a resistance zone. So maybe we expect some further correction in this particular stock. So one can exit in this stock.
Okay, so one can exit at this stock. Okay, let's move on to another viewer query. Shatabdi Ghosh is asking that she's holding PC Jewelers at 16 levels for the long term, and she's asking whether she should average or hold at this point of time. PC Jewelers trading at 13 levels, Devang. She's asking, she's been holding it at 16 odd levels. So she's asking whether or not she should hold or average for the long term.
So PC Jewelers' order structure is negative, also is breaking its major support. So maybe further fall expected. So I suggest exit this particular stocks.
Okay, exit this particular stock. Well, next stock in focus is your Bajaj Housing Finance. We can see that the company's profit and NII, both of them grew in tandem by 25% year on year in third quarter. And even asset quality, however, saw a bit of an uptick on a yearly basis. The stock has been reacting and it is down about 0.6%, more than 0.5% cut coming in for Bajaj Housing Finance. Devang, the stock is also well below its listing price, about 40% downside that we are seeing right now. 105 odd levels it has been trading. What can we expect next? The stock, can we expect the stock to reclaim those levels, the listing price, or the trend is negative for the near term?
So Bajaj Finance short-term trend is negative. Data is quite low, but few data we have. But overall, the structure for the short term is negative. Around we expect some 100 levels is a first support, and after if it's break, then further maybe fall around 96, 94 levels. So one can exit this stocks on Bajaj Housing Finance.
Okay, all right. One can exit Bajaj Housing Finance, and 100 is the support that you're eyeing for next. But let's move on to another viewer query. That is your Dhyaneshwaran is asking the view on Ujjivan Small Finance Bank for the long term. Ujjivan, how does it look like on the charts? Because the stock is under 50 rupees and it is down about 25% in just 6 months. What can we expect from this small finance banker, Devang?
So Ujjain Finance continuously we see monthly chart overall structure is negative. Continuously we see some correction in this particular stock. Trend is down. Maybe if possible further fall expected in this particular stock. So one can exit this particular stocks because the overall trend is negative, and we expect some major more fall in this particular stock.
Okay, exit coming in for Ujjivan Small Finance Bank as well. But let's move on to another view query. Satvika is asking about Netweb Technologies and how does the stock look like on the charts? Well, how does the stock look like on the charts? Because 1 month also we can see very sharp fall coming in for Netweb, 45% downtick. What can we expect in the near term, Devang?
So Netweb's short-term chart is negative. Stock maybe continuous stock fall. Also, its trading is major moving average. So possible we may some major more fall in this particular stock. 400 is a support for the stocks, and 490, 495 is a resistance for the stock. So exit this particular stock because we expect some more fall in this particular stock.
Okay, more fall is expected. But let's take some stock in focus. That is your Bajaj Auto. The company will be reporting its third quarter numbers today, and it is eking out some slim gains in today's trading session, up about right now it is up about 0.5% gain coming in for Bajaj Auto. But as per moneycontrol estimates, the automaker is expected to see modest 5.5% year on year rise in profit, and revenue is also projected to increase by 7% year on year. EBITDA margin, on the other hand, meanwhile, is expected to decline by 17 to 30 basis points year on year due to higher contribution from two-wheelers and EVs. Devang, Bajaj Auto, the stock has plummeted over 30% since October. Any trend reversal on the horizon? Because we are expecting a tepid third quarter as well.
So Bajaj Auto structure is daily chart structure is consolidation is a range bound kind of thing. So I think 8,600 is a resistance. If it is break, then we may expect some more upside. So 8,600 is resistance. If it is break, then 8,900. Its support is 8,200.
Okay, 8,200 support coming in for Bajaj Auto. Well, let's move on to another stock in focus, which is your Cipla. The company will also be reporting its Q3 numbers today, and it is one of the top Nifty 50 losers in today's trading session. But as per money control estimates, the drug maker's net profit is likely to rise 16% year on year, while revenue is expected to modestly rise by 5% year on year. Weak US sales is expected to hurt Q3 margins. Devang, Cipla, the stock has slipped below 1400 odd levels, and now after flipping between 1400 to 1500 as well. What is the next that you're eyeing for Cipla?
So Cipla overall structure is negative. Stocks break its previous major support. So I think possible it's maybe we've seen some further fall around 1350 first support, and then if it's break, then 1320 is the second support. Major resistance is 1400. So we expect some more fall in the Cipla.
Okay, more fall in Cipla coming in. Well, let's take another viewer query. Well, Himanshu is asking the views on Ratan Power. How does the stock look like? Because in the past 1 month, the stock has been quite negative on a setup.
So we suggest this kind of stock avoid for trading because overall the volume is quite low and also it's a penny stock. So we suggest traders to avoid this kind of stock for trading.
All right, just one last question before we let you go, Devang. What are your top bets at this hour? Do you believe any sparks that would come in budget, and what are your top buying picks?
So as we suggest, we defensive counters. So my pick is Tata Consumer. Overall structure is positive. After that, taking a major support stock is bounced back. So it's we suggest one can buy Tata Consumer with a stop loss of 950. Target is 1030.
Okay, Tata Consumer coming in. All right, with that, we have to let you go, Devang. Thank you so much for your time and answering the viewer queries. All right, let's take a quick check of the markets, and we will be moving on to the next guest of the show. Well, Sensex is up about 300 points. Nifty is also holding well above that 22,900 levels. Majority of the sectoral indices, flipping, they are quite mixed at this point of time. Nifty Bank Index, however, holding strong with a gain of about 1%. What is not doing well, however, on the charts include the likes of FMCG Index, which is seeing a cut of about 0.3%, as well as the Nifty Pharma Index, well, the top sectoral laggard at this point of time, seeing a cut of about 1%. Nifty PSU banks, however, up about 3% at this point of time, and broader indices after yesterday's deep sell-off, eking out slim gains. However, small caps are continuing to see pressure, down about 0.8% coming in for the small cap index as well. All right, let's move on to our next fundamental guest for the show. We have Piyush Mehta of Caprize Investment Managers. Piyush, good morning. So good to have you.
Very good morning.
Piyush, let me start off with what the talk of the town is today, China's DeepSeek. That has created quite a rattle in the US markets, and we saw deep plunge in the US tech stocks as well. Now, what does this mean for India's AI play? Because, so far we have focused on applications instead of any foundational tech. So what does it mean for India?
So I've heard a lot of noise. I've read a lot on this as well. And I think when you're looking at India, the whole data center piece and the AI piece, these are two very different aspects of data. And right now we are confusing a lot of it. And my sense is that India per se, the kind of if you look at the usage of data within Indian consumers, we consume close to 22 to 24% of the world's data, while what is stored on Indian lands is not even close to 2-3%. So one thing is very clear by the government is that majority or large part of this data has to move back to India, and for that we'll need, I think, a huge investment into the data center building per se. When we come to DeepSeek or OpenAI, this is largely talking about using high-end computing in terms of GPUs or CPUs. We are not even talking about that right now. In fact, if DeepSeek with is becomes successful with this kind of low cost, it becomes far more easier for most of the companies within India to adopt the ongoing AI madness, and of course the investments within data centers will fast track instead of, taking time, which we believe, we were thinking about a decade, but it could actually fast track looking at the kind of investments that, DeepSeek says that we'll be at, say, we are investing $5 million versus $100 million for OpenAI. So I think it's a big thing. It's a good thing if, what DeepSeek claims comes to is true.
Okay, all right. So there could be, rethink of strategies for Indian tech as well. But Piyush, let's
Yes.
move on and understand, because RBI has also announced certain steps to inject, 1.5 lakh crore liquidity into the money markets. What are you penciling in the Feb 7 meeting? Do you expect, the budget too can quicken the pace of the rate cuts? Because, the Fed has already cut the rates by a total percentage point, and we are still standing at 6.5%.
So I think first, it's very important to understand what was the market worried about over the last a month or so. I think the primary worry was the GDP growth unexpectedly slowing down to 5.4% in the second quarter. The net GST collections, the growth was very modest at 3.3% YOY. And additionally, the GDP growth forecast for FY25 was revised downwards to 6.4%. Now, this slowdown demands very urgent attention in the upcoming budget. And we need to understand this drop has largely been due to low capital formation, weak export performance driven by geopolitical uncertainties, and disrupted supply chains across the world. Now, when we come to the banking question that you mentioned, lending by banks on the unsecured side has slowed down considerably. If you look at most of the business updates, the moderation in growth is quite visible. For private banks, the loan growth has been only 11% versus, peaks of 18%. And, the systemic deposit growth lagged credit growth, leading to a sharp rise in CD ratio, which essentially means that liquidity situation remains very tight with very few signs of easing. And what one of the very important issue also was that the massive decline in India's forex reserve, which we saw a 10% drop there. And in a recent report from Avendus, we read that a 10% decline in forex reserves has a very negative correlation with the banking system liquidity and GDP growth, as we've seen in previous cycles. So with central bank coming in and announcing, open market operations, the 56-day VRR, I think this basic announcement of injecting this kind of liquidity, RBI has clearly indicated its preference for tools other than CRR, to inject a lot of liquidity. They also understand that growth is faltering, and data shows that the banking system's liquidity deficit, if you see measured by RBI's liquidity adjustment facility, it stood close to 3 point something trillion rupees. And with RBI what it has done is it's basically front loaded the liquidity infusion ahead of the possible rate cut, which we'll see on 7th Feb. So I think it's a great move. There was a big requirement of this liquidity infusion, and it is essentially, when you look at the 56-day VRR also, it's viewed as equivalent to a 25 bips rate cut. Now, how much time it takes to percolate down to the system and how banks and MFIs start lending again will take some time to build in. But I think it's a very welcome move by the RBI.
Okay, all right. But Piyush, you mentioned that it could pencil in some 25 bips rate cut on February 7. But on an average, like for the entire year, do you expect how much of a rate cut are you expecting? Because like we are at 6.5. Fed is already at, from, I think from 5.3, they're already at 4.3. So how much are you expecting for this year?
So I think apart from this 25 bips cut, we could expect another 50 bips from the RBI. And I think they'll be monitoring the situation very closely in terms of inflation data. In October, we saw a scare where inflation data had moved above the RBI's benchmark rates. So, and there are a lot of factors actually. So, another worry that has been for the markets has been the rising dollar index, the US bond yields, which came alarmingly close to 5%, and, the corresponding selling by FIIs. So if you look at the US bond markets, most investors today are concerned about the massive 2 trillion deficit that they have and the 36 trillion debt that they carry on their books. And a very alarming factor was that the global yields continued to move higher despite Fed cutting rates. So I think large part of our policy also will try to mirror what is happening globally. And it's very important that, in the previous cycles, we've seen that most, you try to stay in the bond market first. But largely, over the past 2 decades, we've always seen a huge liquidity infusion where largely equity markets are taken care of. But US poses a very, vital challenge of managing the bond markets and the equity markets this time. So I think we will mirror what happens globally, but looking at our own need in terms of reviving growth, I believe that close to 50 to 75 basis cuts is something that market should be comfortable with.
Okay, all right. Piyush, any expectations from the budget as well? Because now that RBI has announced some good monetary easing measures, do you expect more announcements to come in from the FM side to support and to quicken the pace of the RBI rate cut as well?
Honestly, the finance minister has very limited choices, but to introduce some measures to stimulate the economy. I think if there is no decisive action, the slowdown could deepen, creating further challenges. So I think we will prioritize fiscal prudence, the quality of spending to lower the fiscal deficit. We've been very prudent in terms of managing the fiscal deficit, but we need to, considering last year was an election year, we saw massive degrowth in terms of government spending. So, government has to focus on capital expenditure more than revenue expenditure for income stimulus. So, depending on, I think government will follow what they've been mentioning over the past 5, 6 years. Large part of budget will focus on infrastructure, driving consumption, because I think that has been another pain point where we've seen after a lot of years urban consumption slowing down from the commentaries of most of the larger consumer players, while rural demand still is okay because of a lot of freebies that have been doled out. So we need to urgently address, of course, the middle class consumer, which is where I think the focus will be. And apart from that, sectors like infrastructure, whether it's transport, roads, construction, the social, physical and digital infrastructure, capital goods, MSMEs. I think these are the sectors where the focus has to be. But as I said, it's a very tight rope, and not a lot of leeway that the finance minister has in terms of spending. So while world over, budgets are considered as non-events, even in India, we don't really pay as much attention. Once in 5 years, there's something that dramatically comes up in the budget. But this budget is really, really important if we need to see the growth impetus, or how we infuse certain swaps in terms of a lot of sectors that are asking for it.
Okay, okay. Piyush, you mentioned about the capex because that has been muted, so we could be seeing some announcements related on capex related reforms. But Piyush, how about the capex sensitive sectors? They have seen about, railways, defense, all of them have seen about, 25 to 30% correction. But now all hopes are on the FM that she would be announcing certain measures to support execution instead of the order backlog. So what are you expecting, and how do these themes look like in this market turmoil?
I think when we look at the $10 trillion dream that we want to achieve by 2035, some of the sectors become more important than others. And infrastructure, whether it is railways, defense, will need continuous support every year after year, because we are still far, far away from most of our peers. So my sense is that these are sectors where there will be continuous announcements, whether in the budget or apart from it. So whether it is railways, whether it is defense, I think we just hit record exports in terms of defense exports. So these are sectors which I believe should be part of every budget. But I think larger part of the focus in the budget, which we also believe, and would be, say, consumption led. Also I'm expecting a lot of slew of measures on water and water tech. And more importantly, on the energy side, whether it is infrastructure, transmission, renewables, these are the sectors which require immediate attention. Railways, defense have always been part of the government's wish list, and it will continue. But I think there are other sectors which need far more what you say, subsidies or announcements or measures versus the ones you mentioned.
Okay, all right. Piyush, how about, about the overall market setup? Nifty yesterday, it also hit a 7-month low. And, if you look at the global picture, we can see, Trump's tariff talks is also, deterring FIIs away. Global bond yields are also on, 4.5%, we can see US Treasury yields on that front. And even the Q3 earnings have been quite lackluster. So do you believe that the bull market that we saw decisively, 26,000 that we aimed for, that could be, very hesitant for this year?
Honestly, it's a very tough question to answer. We don't like to take a broader market view in the short term, but let's look at what has happened to Nifty. So Nifty's returns were restricted to close to 9% in calendar year 24. But at the same time, mid caps and small caps had gained 24% on the index level. Individual stocks did far better. But as of today, when you see the overall data, 80% of stocks have fallen more than 20%, and more than 55-60% stocks have fallen 30% from their highs. So if you ask me historically, whenever we've seen such kind of drawdowns and such numbers, the end is usually near. Now, can they fall further? Definitely yes. But my sense is the major poison has been consumed. The last 15-20% is anyone's guess. And also another piece of historical evidence suggests, and I'm talking about the last 9 to 10 years, is that index usually falls between December to March and then subsequently rises to make newer highs. Will this be the same this time around, or it's going to be different? I would like to believe the former. And my sense is this slowdown in growth is very cyclical in nature. We believe that in the larger scheme of things, when we say that this will be India's decade, or India's era, it's a very small blip, and the $10 trillion dream seems well in place. We are very confident that we will be the fastest growing economy over the next 5 to 7 years, and based on that, if I have to look at the overall picture and zoom out a bit, I think current correction offers great opportunity. Of course, it's very important what are the sectors you look at. More important is how you realign your portfolios to sectors where we are seeing growth and sectors where we'll see lesser volatility. So, irrespective of what markets have done recently, I still believe that we are poised for a much larger move over the next 2 to 3 years.
Okay. All right. With that, we have to let you go, Piyush. But lovely talking to you, and thank you so much for your time. We hope that we connect with you soon.
Thank you so much for having me.
All right. Let's quickly take a check of the markets and how they're doing. We did start off on a good note despite a weak global handover that we saw yesterday. But Sensex is doing well. Nifty is also holding up well at this point of time. Let's see what the Nifty 50 gainers have to say at this point of time. The rates are not updating, but let's see. Both of them are doing well. Nifty is above that 22,800 odd levels. Nifty Auto Index, however, seeing a cut of about 0.3% at this point of time. Nifty Bank Index definitely holding strong and one of the major market movers for today, up about 1.2% gains coming in for the Bank Nifty Index as well. Nifty FMCG, however, seeing a cut of about 1%, and of course defensive stocks have taken a backseat today, and Nifty Pharma as well, Nifty FMCG, all of them seeing a cut of about 1% or so. Nifty Infrastructure 0.6 coming in, Nifty Metal Index seeing a cut of about 0.7% coming in. So yes, we did start off on a good note. Sensex is up also about 300 points, but we'll see whether or not we can hold off well, because the broader indices have seen a bit of a cut. Mid caps down about 1%, small caps also seeing a cut of about 1.5% coming in for the broader end of the markets as well. But with that, we have come on to an end of this edition of the Opening Bell. Don't forget to tune in at 3:30 p.m. for Closing Bell. We will be discussing about how the market is developed, what the stocks were in focus. Until then, signing off. Stay tuned to moneycontrol.com for all the news updates and market insights.